what makes an oil company a good candidate for our viewers to invest in?
You have to look at which company has been the most prudent in terms of managing its affairs. And I would say it's not per se a recommendation, but rather my observation of the last three fiscal years is that BP has been very prudent with this investment. BP's CEO was among the first big oil bosses to come out and say that it's preparing for a $60 per barrel oil price. And it's trying to shake off the problems that it has had with Deepwater Horizon. The credit ratings agencies are sort of responding in kind and giving it a thumbs up. So BP is definitely on the way up. Shell is reinventing itself. Instead of being big oil, it's become big gas with the takeover of BG. So Shell is definitely a good bet, and Shell has never failed to give a dividend since the Second World War, the end of the Second World War. So a company paying dividend is always a good bet. You look at the European majors, Total has done a lot of investment cuts, but so has Italy's Eni. Now, between the two of them, I would say Eni's investment has been a little bit more haphazard, it's been much more knee-jerk. With Total, it has been a case of playing the market, looking at it, and saying, you know, we're going to hang back, we are going to reassess our investment portfolio and act accordingly. Among the US players, Chevron is a company that I like. With ExxonMobil, the problem is that it's a blue chip. It has always been a blue chip. So taking a position in ExxonMobil, especially if you want physical shares and not put a bet on it, is an expensive proposition. But I would definitely say that what makes a good company is you look at each quarterly, you look at how they are handling their FIDs, their final investment decisions, and who is playing the markets like a game of chess, who is moving strategically, because this age would probably be defined in some catchy way as the lower for longer oil price age.
So without giving away any trade secrets, what should our viewers be looking for in these companies' financial statements as to whether they should be going long or short on their investments with them?
Look beyond the simple P&L, the profit and loss situation. You examine their prospectus and you look at each quarterly statement. I think quarterly statements are very important because you peek into those quarterly statements and you look at what price level most of these guys are saying that they'll be comfortable with relative to that price at that point in time. Also, not only do you look at what investments they're making, you also look at what divestments they're making. What are they getting rid of? And how much is that going to contribute to the bottom line? It's a sad state of affairs, but you also have to examine how many job cuts there are there, because the job cuts rationale, sad as it is for those people who are losing their jobs, the job cuts rationale is how much they're saving. So in order to let go of their workforce, which a number of oil companies are, you will also need to compensate them in terms of redundancy packages and so on. And what is the exposure of that? You factor all of that in. Just don't do a linear examination of P&L. And also, I would say my advice would be don't sort of obsess about earnings per share. Just look beyond the two main headline numbers and look at the investment data.